Welcome to the podcast for Preach to Me for the week of June 24th, 2024. Thank you for joining. Please be sure to subscribe to this channel for the latest interpretation of financial news and analysis, 100% pure, unadulterated, unfiltered, right here on the Preach to Me channel. Thank you for your support and your comments. Now, we're looking at things becoming a mixed bag here as we head toward the third quarter of 2024, meaning that on the surface the economy looks great. We have, people are still employed. Inflation is up, but it's not terrible. It's not hyperinflation or anything yet, and people are still spending money and taking vacations. So that's the good news. That is the good news with this U.S. economy. Now, we do have a mixed bag because even though mortgage rates have fallen slightly from their highs earlier this year, mortgage demand flattens according to CNBC.com's latest report. And also, other central banks around the world are cutting rates, like Switzerland and the UK and other banks are thinking about cutting interest rates ahead of schedule. And maybe the United States will follow in November, December. That remains to be seen. So that's what we're going to talk about briefly here today. You can see here that Reuters.com had a report yesterday, 2 days ago, saying that far from credit crunch, U.S. household wealth is soaring. Now, that didn't say U.S. household income is soaring. It said U.S. household wealth is soaring here. And you can see shoppers in Target here, a super Target in Brooklyn, New York, shopping, buying things here. And so they're saying that, according to this report, the U.S. consumer's resilience to prolonged elevated borrowing costs has shown signs of wilting recently, but barring a deep downturn in the labor market, soaring household wealth should ensure it doesn't crack. So they're saying barring a high unemployment rate, then this household wealth. But where is most of the wealth locked up? And I asked that question to you, ladies and gentlemen. As you know, most of that wealth is locked up in two things: real estate and investments, right? And so if those two things crack, then that means household wealth disappears and we go back just income. So Federal Reserve figures show that the U.S. household net worth leaped by $5 trillion in the first quarter to a record $161 trillion. Now, this is mostly on the back rising of equity prices, while household debt fell to its lowest in 23 years. Well, that may be true, but the way you can spend the numbers in the way you want. The way you can spend it is, okay, yes, we are growing and wages are growing, but is it outpacing inflation? You see what I'm saying? When inflation happens, everything goes up naturally. Asset prices goes up naturally. Wages go up. Your perceived value goes up in terms of what you own. But is that the case in terms of real nominal value? Because it takes more dollars to buy these assets, and that's why. Is it the assets going up, or is it the dollar depreciating to match the assets, the true value of the asset? And so I think it's more of the latter, And so of course all of this will be going up because we could very well melt up. People forget Turkey, Venezuela, Greece, Lebanon. All these countries experience, Sri Lanka, all these countries around the world experience some type of currency or debt crisis, and the stock markets and all the assets melted up. In Venezuela, the stock market went above 60, 70,000, no problem. It melted up, but the country itself was in a collapse state. It's heading down. So that's not a surprise. So this is what we're seeing here, okay? And the key thing here is that the access to credit with the U.S., that's going to be a key thing. Access to business credit, commercial credit, personal credit cards, and to see the limits on those come down and to see what happens, that's going to be the key thing too as well. Now, UK inflation falls. The Bank of England's 2% target ahead of elections. It's funny how all these central banks have a 2% target for inflation, supposedly, allegedly, but so it fell. This declined from 2.3% in April, bringing it in line with the central bank's 2% target. So now they're thinking about cutting, and guess what? This is ahead of the national elections in the UK in July. So we're just a few days away from that. A few weeks away from that election, the general elections, national elections in the UK. And you can see shoppers here on High Street in Kingston District walking around. Not many bags, just walking around enjoying the beautiful weather. It's pretty rare that you get, sunny days in London and in the British places at that. So this is what's going on here, but you can see that the inflation peaked at around 11% back in October 2022, and now the CPI for the UK shows it down to 2% in May 2024. Is this the pattern that the US is going to follow? Are we going to expect it to see falling prices but we don't see falling food prices here? This was the largest contributor to the declines, and car fuel costs continue to see upward pressure. So we're going to see the opposite here. We're going to see rising food prices and rising gas prices prices. So it's going to take us a little bit longer to get that under control than the UK. And so the Bank of England, they have it easy here. They able to make that decision, but our bank, the Federal Reserve, is going to continue to hold rates unchanged until November, December, after the elections are over, and then they may put in a 25 basis point rate cut for the end of the year. Now, mortgage demand flattens even as interest rates hit this lower level since March. Mortgage demand, the rates came down a little bit to 6.82%, 6.92% on the contracts there for 30-year mortgages. Now you look at it and you say, look, people disposable income have gone down. That is the big issue, meaning that taxes, homeowners insurance taxes, all these other fees, and car insurance, everything went up on that angle, and it's true. That means that there's less disposable income to be available to purchase a second rental home or whatever people are trying to do. And mortgage applications are a first starter home, and mortgage applications, of course, are going to be down. Consumers seem unimpressed by the latest drop in mortgage rates. Total mortgage application value rose just 0.9% compared to the previous week. Average contract, like I said, decreased from 6.9 to decreased to 6.94% from 7.02%. Purchase volume is still more than 10% behind last year's pace, so things are starting to slow down, according to the official reports. In these hotspot areas that were selling for it, people were getting $50,000 to $100,000 over asking price. Now we don't see that so much. Most people are starting to take what they can get. These sellers are taking what they can get. They realize that there's a different market out here in this economy. So we're going to see how long things hang on. But the bottom line is we're in for some changes in the next 6 to 12 months, regardless of the elections. And it's pretty clear that credit is going to be tightening. It's pretty clear that quantitative tightening is going to be in effect at least until the beginning of middle of 2025, before we get any type of relief in terms of those interest rates on car loans, on house loans, on student loans, or personal loans. We just have to wait and see. And that's what we have going on here. That's why we always tell you guys to continue to prep either investments, silver, gold, cryptos, having hard cash at home. Just doing a lot of preps. You're not going to be able to prepare for everything. That's the bottom line. We're not here to tell you that you're going to be able to prepare for everything, but you got to have a plan, because if you don't have a plan, you plan to fail. And this is exactly, you can see, everybody can feel it. Everybody can feel that something is off. The numbers are being doctored with this economy, and we just feel that, hey, it's going to be a situation where it's going to be every household, every person, every community for themselves. When it all said, the cavalry may not be coming as quickly as they used to in the past. And so that's the message that we stress, is to have a plan. Having a plan is better than no plan at all. Have fun too. Like I said, continue to take care of yourself physically, mentally, spiritually, and emotionally. But at the same time, be working while the day is still here. And the harvest is still plentiful out there in these streets. So be blessed. I'll talk to you very soon. Thank you for listening. Please be sure to subscribe and share this channel as many friends as you can, because it's not being promoted like that on YouTube for obvious reasons. Thank you for your support. Talk to you very soon. God bless.